Welcome back to the Daily Crypto Roundup. Today's episode is all about setting the tone for the week ahead. We're not running through prices today. Instead, we're focusing entirely on the stories, signals, and analyst commentary that are shaping expectations as we move into the new crypto week. This is about positioning, narrative, and understanding what the market is actually watching right now. Crypto is heading into the week in a familiar but important state. Momentum hasn't disappeared, but conviction is selective. Bitcoin remains the center of gravity, institutions continue to dominate the flow, and the rest of the market is waiting for clarity, not just from crypto itself, but from the broader macro and regulatory environment. One of the biggest themes going into next week is macro positioning, particularly around global central banks. Analysts are increasingly focused on how crypto reacts not just to US monetary policy, but to global liquidity conditions. While the Federal Reserve has already set its tone, attention is now shifting toward other major central banks, particularly the Bank of Japan. Any shift there has the potential to ripple through global risk assets, including crypto, and analysts are warning that this could become a volatility trigger as the week unfolds. This is important because crypto is no longer trading in isolation. Bitcoin, in particular, has become tightly linked to macro risk sentiment. When analysts talk about crypto behaving like a macro asset, this is what they mean. It's responding to interest rates, currency moves, and global liquidity, not just on-chain data or industry-specific news. Going into the week, that means traders and funds are watching macro calendars just as closely as crypto headlines. Another major narrative shaping expectations is derivatives positioning. Analysts have been pointing out that a significant amount of options and leveraged positioning has recently rolled off or is set to ease early in the week. This matters because derivatives often suppress or exaggerate price action in the short term. When large expiry events pass, markets sometimes regain the ability to move more freely. Several analysts have noted that once this pressure eases, crypto could see more decisive directional moves. Not necessarily bullish or bearish, but clearer. That leads into one of the most widely discussed questions heading into the week. Does Bitcoin continue consolidating, or does it finally choose a direction? Analysts are split. Some argue that Bitcoin is building a base for another leg higher, supported by institutional demand and structural inflows. Others warn that without a fresh catalyst, the market could remain range-bound longer than most people expect. What both sides agree on is that the current compression won't last forever. While Bitcoin dominates the conversation, another story gaining traction is the evolving role of stablecoins, particularly Tether. Tether has once again reminded the market just how large and influential it has become. Reports that Tether made an all-cash bid of over €1 billion to acquire Juventus may not result in a deal, but analysts are far more interested in what the move represents. Stablecoin issuers are no longer niche infrastructure providers. They are cash-rich financial entities with the ability to deploy capital into the real economy. Analysts are increasingly framing Tether not just as a crypto company, but as a shadow financial institution with global reach. That raises important questions going into the week about regulation, transparency, and the long-term role stablecoins will play in global finance. Several commentators have pointed out that stablecoins may now be more important to crypto market structure than many individual tokens. Stablecoins control liquidity. They determine how quickly capital can move in and out of risk. And as their scale grows, so does their systemic importance. This is a narrative that analysts expect regulators to pay closer attention to in the coming months, and it's one that could quietly shape policy discussions, even if it doesn't generate daily headlines. Another key institutional narrative heading into the week is the continued integration of crypto into traditional financial infrastructure. Strategy retaining its place in the Nasdaq 100 may sound technical, but analysts see it as symbolically important. It reinforces the idea that Bitcoin exposure is now embedded within mainstream equity markets. Passive funds, index trackers, and institutional portfolios are indirectly exposed to Bitcoin whether they intend to be or not. This integration cuts both ways. On the positive side, it legitimizes Bitcoin as a mainstream asset. On the downside, it increases correlation with equity market sentiment. Analysts are warning that this linkage means crypto may not decouple as easily as some expect during periods of equity volatility. Going into the week, This reinforces the importance of watching broader market sentiment, not just crypto-native signals. Coinbase is another focal point for analysts right now. Reports that the company is preparing to launch prediction markets and tokenized equities have sparked widespread discussion about where major crypto exchanges are heading. Analysts increasingly view this as a strategic pivot. Coinbase doesn't want to be dependent on crypto trading volumes alone. It wants to become a broader digital financial platform. Prediction markets sit at the intersection of finance, information, and speculation. Tokenized equities, meanwhile, represent one of the longest-running ambitions in crypto, bringing traditional assets on-chain. Analysts believe that if Coinbase succeeds in navigating the regulatory complexity here, it could accelerate the convergence between traditional finance and crypto infrastructure. What makes this particularly relevant heading into the week is timing. Markets are quieter. Volatility has compressed. This is often when structural shifts happen quietly, before becoming obvious later. Analysts suggest that watching how regulators respond to these moves will be just as important as the products themselves. Another story analysts are watching closely is the ongoing discussion around crypto exposure in traditional portfolios. Several mainstream financial outlets have published pieces urging investors to reassess how much crypto they hold as prices remain elevated. The tone of these pieces is telling. Crypto is no longer being dismissed outright. Instead, it's being framed as an asset that requires careful sizing. Industry experts see this as a sign of maturation. The conversation has moved from legitimacy to risk management. But it also has market implications. When assets reach higher levels, institutional portfolios rebalance. Profits are trimmed. Exposure is adjusted. This creates natural selling pressure, even in otherwise constructive environments. Going into the week, this reinforces the idea that upside may require a new narrative or catalyst, not just continuation of existing trends. There is also renewed discussion around Ethereum and the broader altcoin market. Analysts widely agree that Ethereum is likely to remain range-bound unless a clear catalyst emerges, such as regulatory clarity around staking products or ETF developments. Without that, capital appears content to stay concentrated in Bitcoin and stablecoins. For altcoins more broadly, analysts are increasingly blunt. Many are saying that this cycle is not about a broad altcoin season. It's about selection. Projects with real revenue, real users, and real differentiation may eventually attract capital. Many others will not. Going into the week, this sets a cautious tone for anything outside the largest, most liquid assets. Another emerging theme is tokenization. Analysts note that tokenization stories are starting to resurface, not as hype, but as infrastructure. Banks, exchanges, and financial institutions are increasingly exploring tokenized representations of real-world assets. This ties directly into the Coinbase narrative and the broader push toward crypto becoming financial plumbing rather than speculative playground. This is a slow-burn story, but analysts believe it could become one of the defining narratives of the next phase of crypto adoption. It doesn't move markets overnight, but it shapes where long-term capital flows. Going into the week, any announcements or commentary in this area are likely to attract outsized attention from institutional observers. There's also a geopolitical dimension here to be watched. Reports of crypto executives engaging with Middle Eastern financial hubs, particularly in Abu Dhabi, highlight a growing competition between regions to attract crypto capital and infrastructure. Sovereign wealth interest, regulatory clarity, and capital availability make this an important backdrop story heading into the week. What this suggests is that regional competition could influence where projects base themselves, where liquidity pools form, and how regulatory standards evolve globally. While this may not move markets immediately, it shapes the strategic landscape in which crypto operates. And finally, there's the behavioral aspect of the market going into the week. Analysts consistently note that sentiment feels strangely muted given where prices are. This is not euphoria, it's caution. Many participants are waiting for confirmation, waiting for clarity, waiting for something to break the range. Historically, these periods of compressed sentiment often precede meaningful moves, not necessarily upward, but decisive. Analysts warn that boredom can be dangerous. It leads to overpositioning, complacency, and surprise when volatility returns. So when you step back and look at the full picture heading into the new crypto week, a few things stand out clearly. Macro matters more than ever. Institutions dominate flows. Stablecoins are quietly becoming systemic. Exchanges are evolving into financial platforms. Altcoins face a brutal selection process. And the market is coiled, waiting for direction. This is not a week about hype. It's a week about signals, about watching who moves first and why. As always, drop your thoughts in the comments. Let me know which of these stories you think will matter most over the coming days. Follow for daily updates and stay tuned as we head into the new crypto week. We will see you at the top.